Welcome back to the channel. Today we're analyzing the latest earnings data and future outlook for Nebius Group, a key player in the emerging AI infrastructure and technology services space. With the stock navigating significant price levels and analysts adjusting their models, there is much for NBIS investors to understand. Before we break down these critical financial tables and charts, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get started. We begin with a look at Nebius Group's current market standing on the Nasdaq. As of the latest reporting, NBIS is trading at $102.16, with a slight intraday decline of 0.41%. The chart highlights the significant journey this stock has taken, with a 52-week range spanning from a low of $18.31 all the way to a high of $141.10. This extreme range reflects the explosive nature of the technical infrastructure sector and the volatile sentiment surrounding Nebius Group. With a trading volume of over 7.4 million shares, the stock is clearly a focal point for active traders and institutional investors alike. This market snapshot provides the essential context as we transition from price action into the fundamental earnings and forecast data that will likely determine whether NBIS can sustain its current valuation or if further volatility lies ahead. Turning to the earnings per share chart, we see a company that is currently operating in a negative earnings phase, which is typical for high-growth technology groups investing heavily in infrastructure. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. In the third quarter of 2025, Nebius delivered a definitive beat over analyst expectations. However, the fourth quarter shows a significant miss, with the reported loss of 0.69 cents being deeper than the estimated 44-cent loss. Looking forward through 2026, analyst estimates point to continued quarterly losses, with projections for the first and second quarters reaching nearly negative $1. This trend reflects the massive upfront capital requirements of the business model. For investors, the key narrative is the company's ability to narrow these losses over time, as suggested by the smaller negative bar projected for the fourth quarter of 2026. The path to profitability is the primary metric to watch. The earnings surprise table quantifies the magnitude of recent performance relative to expectations. For the most recent quarter ending December 2025, Nebius reported an EPS of negative 0.69 against a consensus forecast of negative 0.44, resulting in a negative 56.82% surprise. This disappointing result stands in stark contrast to the September 2025 quarter, where the company delivered a positive 25% surprise. These wild swings in the percent surprise column underscore the difficulty professional analysts face in modeling such a rapidly evolving technology business. In April and January of 2025, the company also saw significant variance. For investors, these large quarterly surprises signal a high degree of uncertainty and execution risk. Seeing how management addresses these misses in upcoming calls will be critical for stabilizing analyst confidence and providing a clearer roadmap for the 2026 fiscal year and beyond. Looking ahead at the quarterly earnings forecast, we see the specific targets analysts have established for the upcoming quarters. For the quarter ending March 2026, the consensus EPS forecast stands at negative 0.93, with 3 analysts moving their targets downward in the last 4 weeks. This cautious sentiment continues through June 2026 with 2 more downward revisions. However, the outlook begins to improve in the second half of the year, with the consensus forecast for September and December showing 2 upward revisions each. By March 2027, the consensus finally turns positive at 0.19 per share. The high EPS forecast for that period reaches 89 cents, while the low end is still negative. This divergence in views among analysts reflects the speculative nature of the company's transition to profitability. The concentration of downward revisions in the near term suggests that Wall Street is bracing for a challenging start to the 2026 fiscal year before seeing the expected turnaround. The long-term yearly earnings forecast paints a picture of a company aiming for a major pivot. For the fiscal year ending December 2026, 4 analysts have converged on a consensus EPS of negative 2.44. Within this group, sentiment is skewed to the downside with 2 downward revisions against 1 upward move in the last month. However, the multi-year projections show a definitive narrowing of losses, negative 0.01 for 2027 and negative 1.76 for 2028. It is important to note the decreasing number of estimates for the later years, which increases the potential for significant variance as new data comes in. The high-end estimate for 2027, reaching $2.49, highlights the massive upside potential that some analysts still see if execution is perfect. This yearly data suggests that while the near-term financial statements will remain deeply in the red, the fundamental thesis remains a long-horizon bet on the company's ability to eventually scale its technology into a profitable leader. The changing consensus chart visually tracks the recent cooling of analyst sentiment over the last month. Comparing the data from 1 month ago to current, we see a visible downward migration in the bars for both the full fiscal year 2026 and the March 2026 quarter. This negative estimate momentum is a direct visual representation of the revisions we discussed in the forecast tables. While the decrease isn't a total collapse, the step down is a clear indicator that professional analysts are recalibrating their models to account for deeper near-term losses. For investors, this chart is a critical signal. When the consensus trend is moving lower, it often puts sustained pressure on the stock price as the market digests the revised outlook. Future upside for the shares will likely require Nebius Group to deliver a significant quarterly beat that can reverse this trend and force these consensus bars back toward their previous levels. It's a reminder that at this stage, analyst models are highly sensitive to every quarterly performance data point. The estimate momentum summary provides the precise detail behind these shifts. For the fiscal quarter ending March 2026, the consensus EPS forecast has remained stable at negative 0.93 over the past week, but has decreased significantly from negative 0.63 over the past month, a 47% deepening of the projected loss. Similarly, for the full fiscal year ending December 2026, the consensus has held steady over the past week, but is down from negative 1.84 a month ago, marking a 32% decline. Of the analysts making these yearly forecasts, only 1 raised their target while 2 lowered it. This data confirms that while the immediate weekly sentiment has stabilized, the monthly trend remains one of caution. Estimate momentum is often a leading indicator for stock performance, and the sharp monthly declines in EPS targets suggest that the professional community is currently de-risking their outlook for Nebius Group as they await more evidence of effective cost control and revenue ramp. Finally, we look at the raw tally of the number of estimates changed to confirm the breadth of this analyst shift. The data is heavily skewed toward the downside. For the March 2026 quarter, 3 analysts moved their targets down while 0 moved them up. For the full 2026 fiscal year, the conviction to the downside is also clear, with 2 downward revisions against only 1 upward move. This concentration of downward revisions among the analysts covering the stock indicates a broad consensus of near-term concern. When the majority of professionals studying a high-growth group like Nebius are simultaneously lowering their bars, it creates a challenging environment for stock price appreciation. This tally serves as a final confirmation of the current cautious approach being taken by Wall Street. For investors, the stability or further movement of these numbers in the coming months will be the primary signal for the next major trend in the company's valuation and market performance through the remainder of the 2026 fiscal year. In conclusion, Nebius Group's latest data reveals a company in a high-stakes transition, navigating significant quarterly losses while aiming for long-term profitability. While 2025 brought some strong surprises, the recent Q4 miss and the wave of downward analyst revisions for 2026 suggest that the path forward remains challenging. However, the long-term forecast still points toward a potential recovery and a move into positive territory by 2027. For investors, the fundamental story is one of timing and execution in a highly competitive technical environment. Thank you for joining us for this in-depth breakdown of NBIS. Don't forget to like, subscribe, and hit the notification bell for more data-driven market updates. We'll see you in the next analysis.